Good Monday afternoon to you people. It is February the 26th here. It is about 1 o'clock here in the central time zone, so we got about 2 hours left in the trading day. A little bit later than my usual post, but I've been looking over a few things this morning, so I wanted to kind of get a few things set up here for you before I got on the mic. So I'll take a look here at the S&P 500 just real quick, kind of start out with. We're actually starting to make a move here now. This is kind of interesting to watch. And I adjusted, I want to go ahead and let you know, I adjusted this retracement right here. Oops. That I figured it would be a little bit more useful to look at it from the 1 year perspective, so that's what I've done. And so that brought down, and we actually have a Fibonacci level that's right in here. It's not listed on the chart at 2800. So that's about 26, 27 points from here. But right now it looks like we have cleared out this this lesser 236 level at 2744, and we are above the highs that we set last week and above the highs that we kind of had been looking at as far as a target for the sell side. So even so, I think you still got to stay with the bearish call. I mean, like I say, right now the tape's kind of, we don't want to be fighting the tape and stuff, so maybe kind of sit on it for a moment and kind of see if if you can get some better prices and stuff. But like I say, the risk reward is just too far skewed for us right now, so we do not want to be buying up here at these levels. But we can let positions ride if we have them sitting on the table, but I am thinning out pretty heavily. One that I had mentioned, and I actually jumped out here a little bit ago, and I was obviously a little bit too early, was Qualcomm. It had rallied pretty heavily intraday, so I jumped out. Let's see here. Right up at this peak right here, so as it started to pull back, I went ahead and jumped ship, and then it's caught another bid and moved to new highs for the day. I think that if you've got a good profit in there, it's okay to let it go for the now. It is getting to a place where resistance will be coming into play at this previous high right here, about 67, 60, just shy of 67 bucks. So we haven't quite met that level yet, but we are very close to it. So this is kind of the level that we'll probably be looking for a pause or some sort of resistance to come in play. So I think that you can cut profits, but we'll be looking to buy this one back because, like I said, I think this has got a good potential for longer term investors. So if you're in it as a short term trade, I'd be looking to jump ship. But if you're looking at it as an investment in a longer term horizon, you're okay hanging on to it here. I think what we'll end up doing is we'll probably test this high. If this breakout is legit and we're actually headed higher, then I think that once we get to this area, we'll probably pull back to the 50-day before we can stage a rally back to the highs up here at the 68.5, 69 area. So I think you kind of stay with Qualcomm enough. Like I say, if you want to do it from a tactical standpoint, you can go ahead and cut it loose and look to buy it back on the pullback to that 50-day moving average, which is about $1 below the market right now. Another one that we had mentioned was Procter & Gamble. It's hanging in there just fine today. I think that you stay with it. It's starting to really starting to form a nice little base here. Like I say, that 80 level has been very supportive, so we want to just kind of keep playing against 80 with the expectation of a return to 86 from our current level. GE is was getting beat up this morning. It was actually a pretty interesting little dip there. It just tanked at the open actually, and you can see it over here, and I'll actually make it down to a 5-day chart here, so you can see that this morning when the markets opened up, this was the open right here. It just cratered and it went down below 14 bucks, so you might have gotten stopped out. But if you didn't, or if you're still hanging on to it, I think you still hang on to it. And actually, it looks like with all this volume coming into play here, this might be a capitulation day for GE, and you can tell that this volume all through here is exponentially larger than this over here. So like I said, I think we are kind of reaching a capitulation point. We thought we hit that the other day when we had those big spikes in volume here, and we can take a look at it on this daily chart. But this is actually forming a pretty bullish hammer candlestick, so this is looking pretty bullish right here. This candle is being formed in GE, so I think you stay with it, and I think you could even buy more because of this very bullish intraday reversal here. To go from being down 3% to now it's up 0.5%, that's pretty impressive. So I think you can stay with GE for sure. Ford is making a nice move today. It's finally getting a little bit of a bid here. We kind of have been watching this one and buying against this 10.25 area. It's finally getting to a point where it's starting to actually take out some of these other moving averages, so we're starting to look to the upside even more. I think $11 is the next stop, and that's kind of because of this previous high here, but I think we're headed to 12 in the next couple of weeks, and if not, then you're still holding a good value stock with a good dividend. So I think you stay with shares of Ford. Another one that I put on was Walmart. It's actually still doing pretty good, and you're okay. It's like I say, it's starting to base out here too. What troubles me though, and this is what we've actually kind of been expecting, was that we might pull them back down here to this 200-day moving average, or even just the 90 area, because 90 was a big support area as well. This volume down here waning like it is kind of indicative of that we're probably about to take the next step down here. So I think that we'll probably be prepared to pull the trigger and buy more, or jump in if you haven't already at 90 to 87 to 90 bucks, somewhere in that area. I think you're fine buying shares of Walmart. So finally, Pandora, I noticed it's finally starting to kind of base out, it looks, or bottom out here and get a little bit of a base of support. Like I say, it missed the earnings and we kind of lost that trade there the other day. But now it is looking like it is trying to, and of course we just don't know until we don't know until we do. But this area down here at 4.25, or just north of $4, has been the low for the stock, and so that's something we'll have to kind of keep an eye on. If this low right here gets taken out and we start headed lower, that's when I'll just definitely stay away from. Right now I'm still holding my calls, although I'm looking to exit them. I was going to exit them the other day, but with the stock getting crushed like it did, I figured I'd wait for a little bounce play. So I think we do get a bounce at least back into this 50-day moving average if the stock's headed lower. Now if the stock's about to head higher, which is entirely possible, you notice we have a higher low in place and a higher high, and the moving averages, even though they just crossed back over, they have, well, actually we did get a break to the downside, so we'll have to just really watch Pandora here. I think it's kind of speculative at this point, so you can just kind of buy it if you need a little bit of a speculative long play, but I would not be too heavily invested in Pandora because they've obviously got some stuff they need to prove. So I think that from a tactical short-term trading standpoint, you can buy this one for a bounce play and would be looking for about $5 if this bounce is actually going to play out, because of this retracement running back into this or 618 retracement level. So kind of stay with Pandora there, or I would actually might be starting to look to short if you get back up to the $5 area. So let's see here. What's the next one I got here? PayPal we jumped into. I think you can stay with PayPal as well. It's taken a little while for it to recover, but it's doing pretty good. I think that we have our moving averages in a good mode here. We're getting close to resistance at about 80 and a half to $81. So I think that we'll kind of run into resistance here just soon. So I'll probably exit this from a tactical standpoint and be looking to buy it back. But I think Pandora is a great stock you can own, or I'm sorry, PayPal is a great stock you can own from a longer term standpoint. And for a good investment on the death of cash. So, all right, guys, I'm gonna go ahead and hop off here for now, though. So this is the update for Monday, and like I say, I'll try to get something else together a little bit later on this afternoon. Y'all have a great afternoon. Hope you're making lots of money, and I will talk to you soon. See ya.